So here's how my mind works when it comes to residential property, land, things that you can do that are non-conventional, right? One of the things that I did in order to acquire a property, actually it was my family house that I purchased. My family house was going into foreclosure. I decided to buy it out of foreclosure and take over the payments. That property, when I got that property in 2018, that property was worth around $97,000. Today, that property is worth $190,000. Now, last year in November of 2024, that property went up to $229,000. If I would have sold it in November of 2024, I could have sold it for $229,000. Today, right now, looking at the mortgage site, it's worth around $190,000. Right? My initial investment was about $25,000 to get it out of foreclosure. And then my other initial investment was I did do a rehab on the property, which cost me about another $20,000. So my initial investment was about $45,000. If today, okay, let's say that was 2018, it's 2025, 7 years later, I can flip that property, right? I could sell that property today and make my money back plus some, or I can keep that property, pull the cash out, all right? Because you can also do home equity loans or home equity lines of credit when you want to keep the property and just pull the cash out. And guess what? When you do that, you can pull the cash out completely tax-free. And this is what a lot of real estate investors do. They buy property, they get a mortgage, or they get a home equity loan on the property, especially if the property is already paid off, right? When you're buying foreclosures or when you are buying tax lien sales or deals, right? At some point, you own that property. And so that's what a lot of real estate investors do is they fix the property up, pull the money out, or they sell it, flip it, sell it, 200, 300, 400,000, and then they just rinse and repeat. This is a conversation that we really need to start having more because I feel like all that is ever pushed is buy a home, buy a home, buy a home. But we're not talking about the strategic ways that you can actually buy property for a fraction of the cost. Me actually pulling that property out of foreclosure was a lot easier and simpler for me to do and acquire that property than it was to go through the whole process of going through a loan officer, a company. And that's because I had the cash on hand. If you have good credit or you fix your credit up or you have enough cash to be able to buy the property from a tax lien or a foreclosure, then you're really winning. And that's a long-term strategy that a lot of real estate investors have used to make millions, billions of dollars these last years, right? And so these are conversations that I like more of us to have on my page and my channel because who am I? Patrice L. Stewart, the realist tax and business strategist. I speak about taxes, credit, business, personal finances, education on my page here and channel. Go ahead and click the like and the follow button, and I will see you in the next video.